Short sellers might be making some money this morning on Tesla. They're still watching squeezed margins take their toll on the company. According to S3 Partners, the stock is one of the most shorted, second only to Apple. And here to talk about how shorts are reacting to Tesla's recent earnings report is Ihor Dusaniwsky, is S3 Partners head of predictive analysis. Ihor, good to see you. Talk to us about how the shorts were positioning going into this and what you're seeing, if anything, in the wake of the numbers.
Well, beginning of the year, December of 22, Tesla short interest was down to $8.6 billion. It's gone back up to the $16 billion range. But over the past month, we've seen 3.6 million shares covered, around $600 million worth of short covering in the name. People were covering ahead of earnings.
Is there any clear reason why some of the short sentiment continues to persist around Tesla?
Well, it's a tech stock that's kind of the bellwether for the group. So it's got huge volatility. Short sellers like the volatility because they can get a big bang for their buck when the stock goes up or down in these big jumps like we're seeing today. If you're on the right side of the market, you really make a great return. But it's really a tech short. You're shorting this instead of shorting 20, 30 other stocks. You just short Tesla.
I'm curious, Ihor, we've talked to you before about the dynamics for smaller companies when there are short squeezes. With something the size of Tesla, do you tend to see short squeezes because of the size as well of the short interest? Or how does that dynamic work?
Yeah, technically, when you have this big a stock, it's really hard to squeeze. But bottom line is a squeeze occurs when short sellers lose money. That's the only reason you get out of a trade. So when you see these huge losses, you'll see people getting squeezed in the stock, and short sellers will cover. The thing with Tesla that's interesting is that when one person gets out, another person gets in. It's kind of like the WWE. You keep getting tagged in, and that's why we see short interest levels so high, because someone who's lost 20% of their trade gets replaced with someone who says, oh, this is a good price for me to short because I think it's going to come down from here.
Okay, and so as we're taking a look at Tesla kind of over these past 3 months, it's been one of the stocks that has taken off over the course of this year thus far as well. So all of that considered, does that just add more to the short profile when you do have a bounce back like Tesla has seen over the course of 2023 thus far?
Yeah, shorts are down almost $6 billion in mark-to-market P&L this year. So they're taking it on the chin. I think right now we're down 6%. So shorts have made back around $1 billion of that loss just today. So you're going to see some new shorts coming in saying, I think the price might go down further, but you're going to see some people that might be covering their positions saying, well, I made back some money or made some money and I'm willing to cut my trade and take my profits.
As we mentioned, Tesla is number 2 on the list. Apple is number 1. And is this just a function of what you were saying that, there tends to be a relatively high level of short interest in large cap tech, or is there something else going on with Apple?
A little bit of both, but really it's the tech stock. So I can short the QQQ ETF, or if I want to have an idea of covering part of my tech portfolio, I short Apple. And as you can tell over the past several years, Apple short interest has really gone between $14 and $20 billion. It hasn't really gone that much higher. It's really a fundamental institutional short.
How much of the additional kind of short, and I guess if you're looking at the broader profile of how retail investors have really popped up over the course of the past 3 years, how much of that is driven or correlated to that new wave of investors as well that have made their way in and are clearly staying involved in the market in some capacity or another?
And Tesla's a great point of interest in this because we have our new Black Mac product, which looks at the long side of the market besides just the short side that we've been known for. So Tesla's got 34% of its long shareholders are held by passive investors, your BlackRocks, your Vanguards. 11% are held by active investors, your hedge funds and funds that trade often, which means that over 50% of the stock is held by non-institutional people, non-institutional investors. So really that's the retail guys and the smaller investment groups that are holding this long. So they really drive the market, drive the price in Tesla. That's why you have a lot of support in some prices and you have these big moves up and down. If the retail investor gets scared, they pull out and they move the price in big jumps.
Well, that's what we're seeing today to some degree. Ihor, good to catch up with you as always. Ihor Dusaniwsky is S3 Partners Head of Predictive Analytics. Thank you.